At the same time, Kenya Commercial Bank has posted a net income of 29.9 billion shillings on the back of an increase in earning assets and foreign exchange income interests for the first half of 2024. Now, speaking during the announcement of the bank's half-year results, KCB CEO Paul Russo highlighted significant growth in the bank's mobile lending, which has grown to 1 billion shillings per day. Our very own Jimmy Mbogo has more on the bank's performance, which has prompted the lender to resume dividend payments after pausing to reserve capital.
Here's good news for KCB shareholders and investors who are set to receive an interim dividend payment of 4.8 billion shillings for the first half of 2024, with ordinary shares attracting a 1 shilling and 50 cent payment. This follows a growth in earnings for the bank, which recorded a 29.9 billion shillings profit after tax.
And based on that performance, the board has recommended an interim dividend of 1 shilling 50, amounting to 4.8 billion that will be payable on or before 30th of October. This is the highest interim dividend we've ever proposed. You can see there 1.5. We've always done a shilling.
In the same period, the subsidiaries outside Kenya's contribution marginally shrank to 34% from 36.3% previously. This owing to the strengthening of the Kenyan shilling in the 6 months under review.
When the Kenyan shilling was depreciating, subsidiaries were posting some very good numbers against the Kenyan shillings when you convert into KES. Now Cosmas says, Paul, you need to adjust my numbers because the Kenya shilling is strong. And I told Cosmas, he didn't adjust the Kenya numbers.
In the half year under review, KCB saw a 99% of customer transactions happening on non-banking branches, while mobile lending increased by 20% year-on-year. With the increased credit disbursement, KCB saw non-performing loans increase by 18.5%, impacted by downgrades in Kenya, Uganda and DRC. Non-performing loans were highest in the manufacturing sector at 26.9%, while the real estate sector and construction industry accounted for 15% of the lender's NPL, with personal loans and trade contributing 14 and 10.5% respectively.
When we get value propositions right, we will get every single bit of our strategy right. We support over 700,000 female customers. In terms of for other segments, we rolled out digital term loans for MSMEs.
In the period under review, the net loans and advances went up by 7% to 1.03 trillion as interest income grew by 35%, supported by improved yields and lending that saw the group total asset grow by 6% to 1.98 trillion, up from 1.86 trillion. This was after customer deposits expanded to 1.49 trillion shillings. KCB CEO Paul Russo has also said that getting involved in the edible oils import deal was a mistake. The deal involved the importation of billions of shillings worth of cooking oil into the country by the KNTC.
Dealing with cooking oil was the most stupid, heavy mistake, benefit of hindsight. I don't share from that. But there are a number of lessons, both from business and individual perspective, that we will take that will make KCB stronger. Certainly it will make me as a leader stronger. There are a number of items that we did under KTC that were successful. Rice, beans, trade, fertilizer. Amazing. Cooking oil, it will be 1 page of a book if I write a book.
Jimmy Mbogo, Citizen TV, Nairobi.